Well, hello class, and welcome to week 4 of BACC 531 Managerial Accounting. I hope each of you are having a great day, a great Memorial Day weekend here in the United States, and having a great start to your fourth week of the bi-term together. As we get started with content and material this week, we're going to be taking a look at two chapters, including chapters 7 and 8. Chapter 7 dealing with the topic of cost volume profit analysis, and Chapter 8 exploring variable costing and the measurement of environmental, social, and governance, or ESG, and quality costs. These two chapters are going to explore some very interesting and very relevant concepts that create not only solutions to challenges, but also opportunities through those solutions for a wide variety of firms and a wide variety of organizations. Chapter 7, dealing with the topic of cost volume profit analysis, is going to explore a variety of analytical techniques and considerations, but can probably best be summarized with a conundrum that's often faced by those that are in sales and marketing positions, and that is, if I want to increase my profits, how am I going to move the needle on sales in order to do that? Well, one of the common solutions to that is to offer some type of price-based incentive. In other words, we'll cut our prices through a promotion. For example, this weekend, a lot of firms have been offering Memorial Day discounts or Memorial Day sales, where they'll lower the cost of a subscription or a product or a service of some kind in order to induce buyers to buy that particular product or that service, whatever it is that's being sold. In order to do that, what's being done is that the sales price, the price per unit, is being lowered by some measure or by some amount, and the overall goal is that that firm will be able to increase its overall sales. In theory, that's a great solution, but the problem is whenever you lower the sales price for any product or service, you also change the equation in terms of how profit is calculated. That's not a new concept to each of you in this course. Even if you're new to the basic mechanics of managerial accounting, you recognize that anytime you scale back on the sales price for a product, everything else held equal, that means you're going to be generating less revenue for that product. So in other words, if we're trying to increase our sales for a firm, and our solution to that is to look at our sales manager and say to the sales manager, hey, I want you to sell 20% more product or 20% more service. And the sales manager's solution to that is to say, okay, I'll just run a promotional discount and then we'll up sales by lowering the selling price. Well, you might end up hitting that goal in terms of sales units, but you might end up falling short in terms of the overall revenue goal of trying to maximize sales in dollars for the firm. That leads us to a situation where consideration of factors such as break-even point, and particularly calculating break-even point through a variety of methods and means, and looking at changes in terms of the break-even point equation and how we can manage that, become absolutely crucial. Cost volume profit analysis is going to include some other concepts in addition to break-even point and harness all of those techniques together to enable us to effectively understand and manage the relationships that exist between the costs of what it is we're selling, be it a product, a service, or a combination of the two, the volume in terms of the amount that's being sold, and then the ultimate profit that's going to be generated from that. In our second chapter, Chapter 8, dealing with the issue of variable costing and the measurement of ESG and quality costs, here we're going to be looking at two major concepts, beginning with both the definition and the use of variable costing as a concept within organizations, the difference between variable costing and what you will learn about as full absorption costing is in the treatment of a specific type of overhead item. The cost of any product is a combination of three basic groups: direct materials, direct labor costs, and overhead costs. But overhead costs can be further subdivided into variable overhead and fixed overhead. Where variable costing and full absorption costing differ is in the treatment of the fixed overhead component. Variable costing only includes the variable portion of overhead in the cost of a product, while full absorption costing will include all of the overhead costs, both fixed and variable. variable. Variable costing does not ignore the fixed portion of overhead, as we'll see. It still counts that as a cost of doing business, but it rather treats the fixed portion of overhead as a cost of the period rather than a differential or a cost of the product in question. That has implications across a variety of fronts, not only in terms of what we calculate our product cost to be, but also in terms of how much cost ends up being capitalized in inventory and thus can lead to differences in the calculation of net income over time. It's just a difference in terms of how we treat the fixed overhead component, but it has important differences that it can afford us in terms of actually understanding what's the marginal cost, the differential cost of the product, and also how we trace and track those fixed overhead components. The last portion of Chapter 8, dealing with ESG and quality costs, is going to look at cost considerations outside of the strict cost of products or services that we're in the business of providing, specifically looking at environmental, social, and governance costs and concerns, or recognizing the reality that in the course of being in business, we have opportunities and we often have responsibilities that extend beyond just the basic business functions that we're fulfilling. ESG investing promotes investment as a concept in companies based in part on their performance with regard to the environment, their society in which they operate, and then good corporate governance as defined by that society and that culture. Thus, we recognize with ESG considerations that businesses have stakeholders outside of simply customers and employees, and they don't operate in a vacuum. They have impacts that extend beyond just the immediate context of the business itself. And ESG costs and the management of ESG considerations is an attempt to recognize that. Because ESG can relate to some very costly areas of business and significant investments, particularly over the course of time, our ability to track, to manage, and to understand those costs becomes important. And it also has a relationship with quality more broadly in terms of how we're providing the products or the services that we're providing, how customers perceive those services or those products. After all, customers are ultimately going to be the individuals who define what quality is and how quality is assessed, and then how we manage that as part of our overall strategy and our overall operational process. So in summary, several interesting things you're going to explore this week as we journey through chapters 7 and 8. In terms of your assignments this week, you have three, a little bit of an additional load this week because you also have the midterm exam. So your first assignment will be the week 4 reading assignment covering content from chapters 7 and 8, and similar to your previous or your prior week's reading assignments, that will be taken through Connect and completed through Connect as a learning platform. After that, you'll also notice that you have your week 4 problem set with exercises related to chapters 7 and 8, and then of course the midterm exam that will cover content from weeks 1 through 4 of the course up to this point. There's a multiple choice exam, and specific instructions and requirements for that are furnished to you in Connect. As you take a look at that, you'll see the time horizon and the specific requirements related to that. But in the way of preparation, I encourage you to review your notes from prior weeks, the PowerPoint slides, and the major concepts that we've explored and worked through together. That will give you solid preparation to take the midterm exam and will give you what you need to be able to succeed there. As always, if you have any questions, please reach out and let me know. I'd be glad to help and to assist with those. You can reach me by email at jake.brock@ucumberlands.edu. I'll be glad to assist with any questions that you have. With that, thanks for watching. Have a happy Memorial Day and have a wonderful week ahead.